There's a strong likelihood that the UK electric vehicle market is about to be flooded with cheap Chinese imports. And the interesting question is that a good or a bad thing? China is producing electric vehicles that are much cheaper than their European counterparts. Cheap electric cars are great for consumers. They're great for the cost of living crisis. They're great for the UK's net zero targets. However, the UK car industry may be wiped out if the UK market is flooded. 182,000 people work in car manufacturing, and taking into account the wider UK automotive industry, this provides 780,000 jobs. It would be a disaster for the UK to lose these jobs. The next decade will see a transition to only electric cars being manufactured in the UK. By 2035, the sale of new petrol and diesel cars will be banned. Thus, the manufacture of electric cars is critical to these UK jobs continuing to exist. The EU is likely to impose a trade remedy, basically an extra import duty, on Chinese car imports imminently. This is to compensate for the fact that Chinese cars are effectively subsidised by the Chinese government. The US market is already effectively closed to Chinese electric vehicles, so if Chinese exporters face high additional duties in the EU, there's a big risk of the UK market being even further targeted. The UK has the legislation in place to open an investigation as to whether Chinese electric cars are unfairly priced, and the Trade Remedies Authority in Reading has said that it's ready to investigate whether unfair trade is taking place. However, no official announcements on this have yet been made. It does require a complaint to be made by the UK industry. The UK car industry and the government are aware of these developments, and the press has picked up on the issues. Auto Trader is predicting a price war in the UK in 2024, so we wait to see what happens. Chinese electric vehicles are sold in the UK, but not yet in large quantities. There's still very low brand recognition, and prices are high in the UK. Auto Trader reports that BYD Dolphin sells in the UK for £25,000 compared to £13,000 in China. Likewise, the GWM Aura 03 sells for £31,000 in the UK, but £12,000 in the Chinese market. However, the expectation is that this is going to change imminently. BYD is now the biggest electric car manufacturer. It overtook Tesla in the final quarter of 2023. And on their website, they've announced that they're one of the official partners for the European Football Championships this year. So I think we're going to see a lot more of the name BYD. If the Chinese were to start exporting at the home prices, they would massively undercut UK-produced cars. Some of the documentation from the EU case highlights the potential problems. For example, it says that there are more than 300 electric vehicle producers in China. While many of them were established to serve their domestic market, the Chinese policies and subsidisation has led to a situation of overcapacity. And the EU Notice of Initiation states that there is sufficient freely disposable capacity in China and that there's an imminent and substantial increase in such capacity which doesn't appear to be absorbable by other markets, indicating the likelihood of substantially increased subsidised imports that would cause injury to the EU industry. An analysis by the Rhodium Group suggests that additional import duties of 40 to 50% would be necessary to make the European market unattractive for Chinese electric vehicle exporters. However, any duties are unlikely to be this high. This is particularly because there's the same conflict in the EU between manufacturers and consumers. Cheap imports are good or bad depending on your perspective. Typically in this kind of case, the import duties would be expected to be in the 15 to 30% range. The indications are that the EU will impose duties on Chinese electric vehicles. Provisional duties could be imposed at any point between now and the 3rd of July. but the duties could be backdated to any imports of Chinese electric vehicles from the 5th of March 2024. In terms of the UK, there's no sign yet that the UK will have a case. If the TRA initiates a case, it will have to conduct an investigation, so no UK duties could be adopted until later in the year. This would mean that the risk of Chinese exports to the EU being diverted to the UK is high once the EU duties come into effect. But of course, there is one argument that this is good for UK consumers. As I said earlier, it's great for the cost of living crisis and great to help the UK achieve its target of no petrol or diesel sales by 2035. At the same time, the threat of the UK completely losing its car industry is high. It probably is the case that the UK will need a duty if it wishes to keep car manufacturing in the UK. And I do have some sympathy with the argument that it's unfair for UK manufacturers to be wiped out by subsidised imports, even if that is cheaper for consumers. These are situations that are always a balance between the competing interests. The adoption of the EU duties on Chinese electric cars will help to focus UK industrial interests as to whether the UK will follow the EU or not. I hope you found this information useful. If you did, please consider liking and subscribing. Thanks for watching, and I'll see you next time.